Fantastic. Well, thank you, everyone. I'm going to go now. This will probably go on for another 5 minutes after 6 o'clock, but I am going to record it and I will send you all out the link afterwards, and you'll have the slides as well. So if you want to watch anything back, please feel free to do so, and you'll be able to forward it on to any colleagues and friends you think might find it useful. This is going to cover both budgeting and fundraising. Budgeting, I have to say, is a little bit of a dry subject matter, I do acknowledge, and I am going to look at some spreadsheets, and it is going to be a little bit boring in that sense, but it's so important when you're fundraising to do really solid budgeting. So I'm hoping it will inform the way you do fundraising, especially if you fundraise with grant funders. So what we're going to do is then whistle stop through after that some different forms of fundraising, but I could do webinar after webinar after webinar just on fundraising. So I do appreciate that actually we're not going to be able to cover a huge amount in this time, but I'm hoping it's going to give you a really good basis. Do put questions in the chat. I'm hoping we'll have a little bit of time for questions at the end. But if we don't have much time, then I will endeavour to answer those questions by emailing you afterwards. And then that way, hopefully you'll still get your question answered, even if we don't have time to do so. I'm on my own today, so I'll be admitting people if there are any latecomers as we go. And I may not notice if you try and ask me a question as we're going. So apologies for that. Normally I have a colleague with me, but I'll do my best. So, budgeting and fundraising. For those of you who don't know about Bedford Creative Arts, we're a socially engaged charity that's been in Bedford for 40 years. We get a chunk of money from the Arts Council through our national portfolio status, but we raise somewhere around 150 to 200,000 pounds of additional fundraising that funds our work every year. So got some experience in budgeting and fundraising. This webinar is being delivered as part of our Producer Hub, and that Producer Hub is a way of us supporting other local creatives and organisations in the fantastic work that they do. We deliver that in partnership with 1 Degree East, my colleague Matthew Jones, who runs Producer Hubs across the region. And some of that is about focusing on 10 particular practitioners, some of whom are here today, but it's also about providing opportunities that everybody can join into. So this is opened up to not just the 10 who are in the portfolio, but beyond. So I'm going to talk about budgeting terminology a little bit. I think it's quite important that you feel confident in that. We'll go through how to actually build a budget, and I will show you a suggested spreadsheet tool, and I will send you that spreadsheet afterwards, so you've got a copy of it if it is helpful. I'm going to talk a little bit about risk because it's something that funders ask about quite often. And then we'll go through some fundraising tips and have some questions at the end. Terminology. If you have run a business before or worked in a charity, you might be quite familiar with some of this terminology, but funders often talk about these things and some people can get confused what they all mean. So I'm going to quickly run through these terms, but I think it's really helpful to go back to this sheet and remind yourself if you see a funder ask you about any of these things and you're not quite sure what they're asking about. So when we do a budget, we do it in what we would call a profit and loss format. So it's literally what money comes in, what money comes out, and the difference at the bottom. And in business terms, people often talk about the profit and loss, and they might use the term the income and expenditure account. And what they mean is, what's the business doing? What's the money coming in? What's the money coming out? And what's the difference? So if you hear businesses talk about the P&L or the I&E, it's the same thing. And lots of businesses will report on their profit and loss for the year to date, by month, by quarter, by year. When you're working on a project, your budget will probably look like a profit and loss. It will say what money came in, what money came out, what's the difference? If you are a business, you'll also have a balance sheet. And a balance sheet is simply a statement of what the business is worth. And it's quantified in terms of how much cash they've got in the bank, who owes them money, who do they owe money to, and what do they have that has financial value, like buildings and assets. It is a moment in time report. So if you're not a business, you won't have a balance sheet, and it can only ever be valid on the day that it's produced. So most businesses include them in their annual accounts at the end of the year, and it basically says this is what the company is worth. You hear the term in kind quite a bit in fundraising, And that's things that are given to you that have a value, but they're given to you for free. But because they have a value, it's good to quantify what they're worth. And that can either be things, stuff, products, or it can be services and people's time. But it's given in kind because it's given for free. Profit is also sometimes referred to as surplus, and there's a reason for that. As a charity, we're legally not allowed to make a profit, because a profit is something that businesses pay to their shareholders if they are a business that's limited by shares. They can choose what they do with their surpluses if they've earned them. If you haven't earned your money through working for it, but you've got it from a charity, you may not be allowed to keep it and do with it what you like. But it is still a surplus. So you sometimes hear the word surplus used instead of profit, but it's the same sort of thing. It's the positive difference between how much have you got left if you've taken the expenses out of your income and you've still got some money. Deficit is, of course, the reverse. It's where you've spent more than you had come in and you've got a negative figure at the bottom. Match funding is a term that literally means if you're fundraising, funding that's come from sources other than the person you're asking for money from. So if you're making an Arts Council grant, they acknowledge the money they're going to put in, but they're saying, who's going to match the money? Doesn't necessarily mean like for like. So it doesn't mean necessarily if I'm putting in £5,000, someone else has to put in £5,000. It doesn't necessarily mean sort of 50-50 match. It could be 10% match funding or any figure that the funder asks for. And you can use in-kind things as match funding. So if someone's giving their time for free, it still has a value. It still matches money that you're getting from a funder. Reserves are money that you keep in the bank effectively, that, you know, if you're a company or a freelancer and you keep back and it's not, you know, within the project timeline, it's reserves, it's money left behind. And what you can do with those reserves is you'll have them in two different ways. They'll either be unrestricted or they'll be restricted. And you see this terminology used a lot by funders because they're often interested, if you are a business, in understanding actually what level of ability to pay for things yourself you already have. So unrestricted simply means money you have in reserve that isn't legally tied to any purpose. You can choose what you do with that money. It's unrestricted. You can spend it on what you like. If you can get unrestricted money from a funder, that's amazing, because then you can literally spend it on whatever you like. You can choose what to spend it on and which projects, and whether you put it on staffing or things. It's unrestricted. Restricted is, of course, the complete opposite of that. That's money that's been given to you that you can only spend on a specific purpose. And most grants are restricted. When they give you that money, they give it to you for a specific purpose, a specific project. And if you've given them a budget, they've given it to you for specific things. And so you can't spend it on something else without their permission. It's a legal restriction. It would be illegal to go against the restriction. So designated is something else. Now, designated funds are unrestricted. So they're funds that you've got and there's no restriction on them. You can choose what you spend them on, but you've chosen to designate them to a specific purpose. And a lot of charities do this when they say, actually, I've been building reserves by making surpluses for a while, and now I've decided I want to invest in a vehicle. And so I'm deliberately going to designate a bit of money each year to build up a fund that will allow me to buy that vehicle. But because it's your choice, it's not restricted for the vehicle. It was just designated for the vehicle. You can always change your mind. And so free reserves are the bit that's left. So if you've got unrestricted reserves that aren't designated and there are no restricted funds, it's the floating money that you've got discretion with that sits in between, and they're free reserves. Again, if you're not a business and you're not a charity, you might not have these things or need to talk about them, but you often see funders refer to them. They may want a set of accounts that lets them know what level of reserve they've got. They want to know what money could you put into your own project. Having too much reserve is not going to help with funding. A good level of reserve for a business like us would be between 3 to 6 months running costs, as a general rule of thumb. The annual accounts are simply when you get to the end of a financial year, again, only if you're a business, and you can say over the past year, what has happened. And again, charities that tend to fund businesses, organisations, CICs, charities, etc., will tend to want to see annual accounts. And if you're a new organisation and you haven't yet produced them, they'll want to see evidence of what has happened over the months since you've been operating if you can't provide a set of annual accounts. Now, when you're doing a budget, you're going to think about how you pay your artists. Some people have said to me, oh, there's an Arts Council rate for paying artists, and it's not true. There is no Arts Council rate. But if you're going to someone like the Arts Council, they do want you to have a way of having thought about why you're paying your artists, what you're paying them, and for it to be fair, and for you to be able to justify why it's the level that it is. So the Arts Council don't dictate what that level should be, but they ask you to prove usually what rate of pay you have chosen and why. There are different recognised codes of practice and guidelines in different industries. And I'm not talking about arts and culture as an industry. I'm talking about music versus visual arts versus theatre and etc. And they all have slightly different rates. So the rate that you use will depend partly on the industry that you're working in and whether there's a trade union or a guideline that tends to govern that industry. Well, there might be multiple trade unions and guidelines. So visual artists are governed by several, and I've listed a couple on the slide there for you. They tend to suggest rates that they think are fair and equitable, having negotiated with their members about those rates. So it's a good idea to look at those when you're setting budgets. You also need to be aware of what the national minimum wage is or the living wage. So if you're employing someone on a payroll contract, then obviously that's the minimum wage is the minimum that you should give people. But you might want to think about whether you think it's fair. BCA, for example, always pays the real living wage instead of the minimum wage, which is slightly higher. And you need to think about on what basis they're doing them on. So are you paying them as a freelancer or are you going to employ them? And this is something you just need to be a little bit aware of. So there's a rule about when this switches over, and I've put IR35 on there, which is an inland revenue guidance, which helps you decide this. So they clamped down a few years ago on people paying freelancers to try and get out of having to pay people pensions and sick leave and holiday pay and all the stuff you'd have to pay someone if they were an employee. And so they've really got quite sticky about this notion of, are you freelance or are you an employee? And one of the key rules of thumb is if you're dictating to someone the hours that they're going to work, and the days that they're going to work, those terms, then they're an employee. So if you're saying to someone, I want you here at 9 o'clock on a Monday, I want you to do Monday, Tuesday, Wednesday, and your hours are 9 to 5, and you're dictating that, that's an employment contract, and you should put them on payroll and pay them as an employee, and that will open up the can of employment law and all their rights. If they're freelance, then actually they have the right to dictate their terms. So you can say, this is the budget, or I'll pay you this daily rate. You might have key dates when events are happening that you'll say, that's when something needs to be produced. But actually how and when they do the work is in their control. And so one of the things I like to point out is that if you want to think about a rate that you're going to pay someone, the first place to go is to actually ask them. Everyone will have their own rate. And what you'll notice if you look at some of these rates, particularly for visual artists, is sometimes the rate changes and increases depending on the level of experience of the artist or their overheads. If you're a sculptor and you have to have lots of tools to be able to do your work, it costs more for you to do your work than it might be if you just did sketching and you just needed to have sketching materials. So their overheads might be lower. So the rate that an artist charges might differ depending on their practice. And so you also need to think about what your rate is. Do you align yourself with any of the rates from those unions? What if you're doing a project that's paying musicians and actors and visual artists? In that case, you might want to negotiate with them that you're going to pick a rate that's somewhere in the middle of all of them. Or you might acknowledge that they are just on different rates, but you can justify why. So when it comes to paying artists, you've got to do a bit of thinking for yourself, but that's what the Arts Council is asking you to think about. Different types of income. So at the top of your budget, you're going to have your income streams. And here's just a suggested list of different types of income. And a bit later, I'm going to go through each one in turn and talk to you about what that means. Different types of expenditure. This is a useful list for you to keep when you're building your budget. I would go through these, and they're a bit like if you've ever worked in a business where you've had account codes, they're a bit like account codes, which is where you would code the expense to a different type when you were coding things into accountancy software. We've got codes a bit like this. And it just means these are the headings you need to think about when you're thinking of your expenses: artist fees, professional fees, materials things. Marketing might be broken down into print, graphic design, any software you might need for marketing. PR, are you going to pay someone to do that for you as a consultant? Are you going to do it yourself? Advertising, are you going to boost posts? So you're going to pay for ads or none of that? Venue hire, what's that going to be? Are there licensing costs? Do you need music licenses? Do you need a temporary event notice? All of those sorts of things. Volunteer expenses. Do you need to get legal advice on anything to produce contracts? Do you need governance costs? If you're going to be setting up a company as part of what you're doing, are there any costs associated with that? What about travel? How are you going to travel? You know, cover your travel expenses. Is it a mileage rate? Is it going to be paying for taxis to get people traveling around? Do you need to train anyone? The costs of sending people on first aid training courses or safeguarding if they need to have that to do it? Insurance, do you need any special insurance to be able to do it? Utilities, admin costs, evaluation, are you going to pay someone to do that for you? Are you going to do it? Are there costs built into doing any of those things? I've just asterisked a couple of them and said, those ones, if you're purchasing a big expensive thing, it's probably a capital cost. And that's something to be aware of with funders. Some of them will only fund revenue, which is just sort of operational costs. Some of them might only fund capital, which is buying of a thing. And some of them will do both. Or there may be limits where they may say, if you're doing a project, up to 10% of it can be capital. If you're buying a vehicle or you're buying a projector and it's quite expensive, it might tip into what's defined as capital. So always check with your funder whether or not they fund capital and how you would quantify the things that you're buying for. So I'm now going to show you an example budget. If you're not keen on fuzzy colours, this may not be your thing. I'm going to zoom in a little bit actually, because that is a little bit small. Right, hopefully you can just about see that. And as I say, I'm gonna send this over to you so you'll have your own copy to look at as well. But I'm going to talk you through this template, and it may not be helpful to you. It may be helpful to you. You don't have to use something like this, but sometimes it's helpful to see how someone else does it. So when we do budgeting, what we do is we list every single transaction we put into a budget. And so you have the date that you expect the expense to happen or the income to happen, who it's going to or where it's coming from, and then a little description. If you're using accountancy software, or if you're going to a funder where they like to categorize expenses, so they might say, how much are you spending on artist fees? How much on venue costs? How much on project management? If you have an account code column, you can put those headings in. And we always have these three columns when we do budgets. We have the budget, we have the committed, and the actual. And the reason why we do that is because when you start a project and you're planning it, you set a budget, you make a plan to do that. You say, I'm hoping I'm going to get this, and I'm hoping I'm going to spend that. Once you get into a project, there'll come a moment when you're committed to it. So if it's income, it becomes committed when you've got it. You know, when the funder's written to you and said, you've got the grant, even if they haven't paid it to you, you go, yes, that's committed now. It's definitely going to happen. And the same is true as with expenses. Once you hire a creative to work with you and you contract them, you're committed now to paying them that fee. So then what we do is then put it in that column. And then once the payment has actually happened and it's left our account, or come into our account if it's income, we put it in the actual column. So it might seem a bit confusing, but it does allow you to track, what did I plan to spend? What am I actually likely to spend? And what have I spent so far? And by having those three different columns, you can always see where you're actually at, where you're headed, and how it differs from your plan. It's also useful for evaluation when you go back to a funder at the end of the project and they say, well, did you spend what you thought you were going to spend? And you can go, Actually, maybe it was slightly different. And then I like to have a variance column. And that variance I generally tend to do between the budget and the committed. And that allows me to see, what did I budget to spend? How much have I committed so far? What's the difference in the variance column? So if I haven't yet committed it, I could change my mind. I mean, a budget isn't set in stone. You can always move things around between the codes as long as you don't overspend. And that variance allows you to see that. So I filled in an example here of a totally fictional project for you to get a feel for how much detail we put into our budgets. So in this example, I've said, I haven't put any dates into this, but I've said, let's say we're going to go for an Arts Council project grant. So it's a grant, and this is how much we're going to ask for, which you'll notice is basically the balancing figure for the project. But let's imagine that we've already got a grant from the Gale Family Trust, and they've written to us and said that they're definitely going to give us that grant. That's fantastic. Okay, great. So we've already got £3,000. Put that in the committed column. They haven't maybe sent us the money yet, but they've said yes. Now I put in some figures for things like ticket sales, and I've literally broken down exactly how I've calculated those ticket sales. Lots of funders want to see the detail. You're much less likely to go wrong and either under or over egg if you go into detail. So let's assume this is a theatre show. I've got a 100-seat venue. I'm going to do 3 shows in that venue. And I'm going to sell 75% of those 100 seats. And I'm going to sell them for £5 a ticket. Well, then that's what gives me my £1,500. Then I've said maybe there'll be some programme advertising, and I've worked that out, that I'm going to have 10 half-page adverts across 5 pages. I'm going to charge £50 an advert, so hopefully I'll get 500 quid. And then I've put in kind, and I've put see below here. Now, the thing about in kind is that it's money that comes in at the top and comes out at the bottom, because even if it never exchanges hands, even if it's someone saying, I'll do that for free, effectively they've donated their time and you've spent it on their time. So it comes in and out. And different funders will sometimes allow you to put in-kind funding in different places. So sometimes, like the Arts Council has a section where they say, and now do the in-kind bit, and it's slightly separate from the budget. But other funders, you might want to put it in the budget like this. So in this example, I've got a nearly £20,000 project, but actually, because I've already got a £3,000 grant, and the venue said I can have it for free. It would have cost me £2,000, but they've said I can have it for free, but that's committed. I've got a partnership agreement in place. And some charity staff are going to work for free on this because they're funded perhaps in a different way. Like we as an NPO are funded through the Arts Council. We might donate some of our time for free. So I've actually got £7,500 worth of stuff already. Only 3 of it's cash, but it's worth £7,500. So I've only got 12 and a bit to go. And that is 38% match. So it's 38% of the total. And I think that's a pretty healthy match funding figure for a funder. And then what I do for the expenditure is I like to break it down into different sort of subheadings, so I can look at different bits of the project or different areas of delivery. And in this case, we've got the creative activity. And again, maybe I'm working with this artist called Joe Bloggs, and I've put in their rate. And their rate, because of the artist guidance I'm using, maybe this is Artist Network guidance, they have different fee rates depending on if they're working on design or delivery, depending on if they're doing practical stuff or just planning it. So I've put in the relevant rate. So the rate for Joe Bloggs for design and preparation is £202.12 per day, and I'm going to pay him 3 days to prep for that. So there's my figure. But then I'm going to ask him to deliver workshops. The rate goes up a little bit for Artist Network for that. So I've put in that rate for 3 days. And then exhibition installation, slightly different rate again. You may want to simplify it and say to him, why don't we agree an average rate per day? And I just pay the same rate for all days. Again, as long as you can justify it and be transparent and the person you're paying is happy with that, that's okay. And then things like travel. Instead of just putting travel and guessing a figure, try and be as specific as possible. So I've put, £53 for a train ticket from London and return for Joe to come to Bedford over 5 days. I can work out exactly what that's going to cost me. Funders love detail. They love to see that you've got into this detail. It's so painful, but it's so worthwhile. Or you might have something like this: constructor, set build as per quotation. So actually, if you're not guessing, if you've gone to someone and said, can you give me a quote for doing this? And you have a quote, put the quote in. Refreshments, I've gone down to an allowance for that. I'm going to pop to the local supermarket, but I've got 6 meetings. I'm going to spend about £25 per meeting on refreshments so that we can have some teas and coffees when we need. And venue hire. So there you go. There's that venue hire. It's in kind, and it's £2,000 because it's £200 per day, and I'm hiring it for 10 days. Because you can see here, it's in at the top and in at the bottom, comes in and out. So it neutralises out the budget. And actually, I can put that in the committed column, because as soon as I'm actually going to use the venue, it's committed. So I've done the same through all of this. Now down here, I've even put in staff time, and you'll notice that I donated £2,500 of staff time, but it's actually going to cost me more than that for charity staff time. So I do want the funder to contribute a bit, but I'm putting in more than, about half. And then I put in a contingency in this example, and I've assumed maybe 10% of the budget. Contingencies are interesting things. Some funders like to see them because it helps you manage financial risk, and some funders, like the National Oddity Community Fund, don't allow them. So you need to think to yourself, is putting in a contingency line helpful? But what am I going to do if I get to the project end and I haven't spent it? Are they going to expect it back? Can I justify spending on something else? If this is restricted funding, what could I justify? Is it worth putting in or not? And that's something that you'll have to debate for yourself. So I'll send you this template for you to have a play with in your own time. I mentioned financial risk, and this is something Arts Council certainly ask you about. Lots of funders do. And what they want to know is, they're going to give you all this money. Well, they could lose it. It's their money. What considerations have you given to making sure you protect it? And here are some ways of doing that. So you need to think about, well, what are the risks of something going wrong financially? What might cause those risks? How likely are they to happen? How bad is it if they did happen? And what, therefore, could I do to prevent it happening or reduce the risk of it being so severe or so likely? And I've suggested some things there. I mean, one of them is failure to achieve financial targets. If you're assuming, say, ticket income, what happens if people don't come? How are you going to manage that? So you need a narrative that says, okay, well, how am I going to manage that? Maybe you can justify it by saying, well, actually, I've done this loads of time before, and every time I've done it before, I've sold at least 80% of the house. And in my budget, I've only budgeted for 70%. So actually, that's how I've managed risk. I've just acknowledged likelihood here. Or you might say, well, that's what the contingency is for. I only budgeted for £1,500 of ticket income, but I've got a contingency of 1,600, so I'll be okay. They just need to see that you've thought about it. Other things that can go wrong is, what if you have a system failure? What if your spreadsheet's adding up wrong or something, and you set it up wrong and only notice halfway through? Honestly, I've had that happen to the tune of £200,000 before on a £2.5 million product. It does happen. Fraud, theft. What happens if one of your team wanders off with money or something, or gets, caught into a scam or something? What happens if you just overspend because you're just not great at keeping track of things? What are you going to do if the quote that you got when you applied for the money is now different because it's gone up? How are you going to cope with that? So these are just things to ask yourself and try and think of what your mitigation might be. Budgeting approach. I would say err on the side of caution, include absolutely everything in minutiae, if you can. It means a lot of thought up front, but you're much less likely to go wrong. Remember that if the funding you're getting is restricted, what's going to happen if you have to give it back? Can you spend it elsewhere? And one of the things I would always recommend is building into the cost of your project the beginning of thinking about the next project and debriefing on the project. Because what you could do is say, well, I've added, 1 day of my time at the end of the project to write up the evaluation and debrief. But actually, if you have 2 or 3 days worth, you say, well, I'm going to spend 2 or 3 days writing up that evaluation and thinking about it. And funders probably not going to mind that too much. Have a plan for what you do with your underspends if you have them. Keep all your receipts and evidence of income and expenditure. Some funders want to see it as they go, and some won't ask for it, but could be audited. So I have had people get funding from the Arts Council. Arts Council don't want to see your receipts. They just want to see your final budget with your income and expenditure on it. But then maybe 6 months later, they get audited and they say, you've been picked for a random audit. We need to see all your evidence. So keep it. It's often in your funding contracts to say, keep it for 6 years. What is everyone else doing? It's okay to ask. People might not tell you what rates they pay, but say, how much contingency do you allow? Or kind of thing do you generally tend to pay for that? Or have you included this? Or which kind of union do you go to for rates? Like, just see what people will share with you, because obviously the funder's seeing everybody's view. So the more you can find out from other people. And I would say if you're doing match funding, even if they say, and the Arts Council do say, oh, we'll fund 100%, they rarely do. So try and get at least 10% match if you can. And they do love cash against in-kind. In-kind is easy. It's easier to get people to give you stuff for free, but cash is king. And as I say, contingency if you can. So we're going to look at income now. We're going to go through some of these types and think about fundraising in a whistle-stop tour. Grants. Now, you can get grants from statutory organisations, like local authorities often have grants. You can get them from lottery funders. You can get them from other statutory organisations like the Arts Council, who deal in both lottery and central government money. You can get them from private trusts and foundations. They all work the same sort of way. This is general advice, but always worth reminding yourself. Always read the criteria and check you're eligible to apply. Some funders might only fund charities, and they will mean a charity with a registered charity number. So check. Some funders don't necessarily just fund charities, but they may have other restrictions. They will always say what they're looking for somewhere, however vaguely, in the things that they fund. So read it. Never fall foul of sending them an application where actually you're just not eligible, or it just doesn't align with what they're looking for. Only then apply if you think it's a good fit. And I say this because the national success rate for almost all grant funders is currently 4%. I just did an Esme Fairburn webinar, and they said they get in excess sometimes of 5,000 applications in a year, and they only fund 300. Those figures are shocking, but actually that's a 6% success rate. So 4% for some others is low. It's very depressing, and it does vary from funder to funder. But obviously it's not going to be a good use of your or their time if you apply and you just don't fit. Do try and contact them beforehand unless they discourage you. And they normally make that quite clear on their website, on their guidance. They will either say, here's our contact details, and be very vague, and it sounds like they're really up for a chat. Or they'll say, we don't have time to speak to you, please don't try. But even then, they're not going to be rude if you try. The only reason why I would say that is because it's quite nice to, A, check you understand the criteria. So if you've read it and you've got questions, see if you can ring them and get them answered. And secondly, even if you think you're eligible and you think it's a good fit, it's nothing quite like having someone on the other end of the phone go, yes, you've interpreted our guidance correctly, your project does fit. And they are quite good because they are so oversubscribed, saying, not really what we were imagining, we're thinking more like this. Or they might be more vague and say, well, if I give you an example of what we funded last month, great, at least you've got that feedback. If you don't think you're good fit, save your time. Best bit of advice, look up the charities who are funders. So you can't do this for local authorities and statutory lottery funders, but you can do it for trusts and foundations. Look them up on the Charity Commission website and download their latest set of annual accounts. It's all free. Most charities will list how many people they funded. They might even list the names of the people they fund. And they might even list the amounts that they've funded. In fact, most trusts and foundations do. So you might go onto a trust and foundation website and they say, generally fund people between £5,000 and £20,000 for a project. And you go, oh, I could go for £15,000. Then you look at last year's annual accounts for that charity, scroll down through all the blurb to where you see the list of people they funded. And what you might see is that they gave the National Theatre £20,000, somewhere in Wales £20,000, and everybody else got £6,000. So now you're going to look at that and go, am I likely to get £15,000 if I apply? No, I'm not. I'm more likely to get 6. So apply for 6 and you'll increase your success rate. Always check first. Tailor the wording of your project to fit their priorities. So reflect the language back. You might talk in terms of well-being, and they might talk in terms of improved life outcomes. But as if you think about it, you could argue maybe the same thing. So all you do is just use the same wording back. It makes them easier when they're scanning through to see the words leap out at them that this is something that fits what we want to fund. This is the hardest thing for you as freelancers, I appreciate, because you're not funded till you're funded. But I really recommend that you don't apply until you know exactly what you're going to do and how you're going to do it. They will ask you questions in that application process. So how are you doing it? Who are you reaching? And again, just like the budget, the more detailed you can be, the stronger it is. If you're vague, they're going to say, these guys aren't ready, or I'm not sure they can deliver it, and they'll just kick you out. So never be vague. Always be able to say, I'm going to do it in March. I'm going to work with these people. I'm going to reach 20 children across 5 classes in these schools, and I can name the schools. If you're at that level of detail, go in. If you're saying, I'm going to work with some schools, I'm going to work with between this many kids, it's all too vague. They're going to assume you're not ready for the funding. They want to know that when they give you the money, you're good to go. And then this is how you write it. If you write it, and you can use AI, so a point on AI, you can use AI, but most funders will have an AI policy, and they will ask you usually to declare that you've used AI in writing your application. Some of them may say you can't use AI, and some of them may have either a neutral or maybe even a negative view of it. So that's something to check with each funder. What's their view on using AI? But assuming you're writing it yourself, I think it needs to be like a GCSE exam in English. What you need to do is you need to make the point and then evidence it every single time. So for example, if you say, we deliver high quality creative projects, they're going to go, who says it's high quality? You? Of course you're going to say it's high quality. Prove it. So, in the last 5 years, 95% of our audience has rated our work as good or excellent, and we received 3 national press reviews rating our work as 4 stars. Here's evidence that I'm not making that up. A compelling piece of daring new theatre from an exciting company, The Guardian. Now, that's ambitious, but you get my point. Don't say things like, we're an exciting new company. Who says you're exciting? You do. Of course, you're going to say it. Who says you're high quality? When you say we work with deprived communities, prove it. Name some deprived communities. Name the stats of deprivation in those communities. They want that level of detail. If you can put that detail in, it makes it credible, and they believe that you really know what you're doing. The worst grant applications I've read is just someone just talking about themselves, they're marvellous, but just never once given me any shred of evidence that anyone thinks it but themselves. Where can you go to find grants? Here are some suggestions. There's the Directory of Grant Making Trusts, which you can get in a book. This is my very out-of-date version of it. It's a weighty tome. This costs over £100 to buy, but libraries provide books for free. So don't forget to go to your local library and say, do you have the DSC, Directory of Grant Making Trusts? This is an amazing book. You can look up grant funders by topic. So I want a funder that funds young people. They list all the funders that fund young people. Or you can say, I want funders who fund things in Bedfordshire. List of funders who fund in Bedfordshire. Or, I want things that fund the theatre sector. List of funders. Obviously, these days you can get this in an electronic format, but you have to pay a subscription. So that's the only reason why I say library might be better, because subscriptions are hard to come by. Someone who might have a subscription is your local CVS. So the Bedford CVS, in our case, Council for Voluntary Service. If you go on their website, they've got a lovely section of funding where they link you to some funding sources. They may let you know if someone pays for a directory where you could spend just an hour at some point just searching through for names of funders. They also do an amazing mailing list where they'll send you the latest deadlines for funders that they're aware of. Community foundations distribute grants on behalf of local businesses and local authorities and things. Our local one is the Bedfordshire and Luton Community Foundation. Again, the deadlines will change throughout the year. Funds will open and close. Sometimes a fund will only last for a few months and then a new one comes along. Sign up to the mailing list is the best thing. You can actually just search for funders through the Charity Commission website. If they're a charity that funds, they'll be registered with the Charity Commission themselves. And you can search in a way where you can search for grant-making bodies and look for keywords. Other people's work. Literally every time you go anywhere, pick up the leaflet and look at the logos at the bottom and then look them all up online. And local authorities, check all the local authorities where you are. Often local authorities will have short-term grant schemes based on funding they receive. Tough times for local authorities. They may or may not have other funds available. But certainly in Bedford, ward councillors have a small amount of funding per councillor to spend in their ward. So they're normally good for getting a little 500 quid or something out of. And it might not sound like very much, but if it's going to provide you with match to get your bigger funding from another lottery funder or something, it's really, really valuable. And it's the name of the local authority as well, which is powerful. A note on bid writers. Some people go, is it worth using a bid writer or not? I just think you need to be aware that they have an expensive daily rate because they're worth it. And they will need paying up front. You cannot expect them to be paid on commission, and you cannot build in the cost of using a bid writer into your grant. No one will fund retrospectively for the time you spent. And with a national success rate of 4%, no one's going to run to write your bid if actually there's a 96% chance it's going to fail, which has nothing to do with the quality of their bid writing. It's just the climate that we're in. I wouldn't say don't use them. I do know people who've used them, and we ourselves have used them because they do save time, but you will need to have money to spend. If you're not great at doing bids, it might be worth it. Forms of earned income that you can include. So ticket sales, advertising, corporate sponsorships, so beyond just advertising, but maybe having their name and the title, banners all over the place, being involved in your project. You can sell your time. You can sell the stuff if you're creating visual work, so you can sell it at the end or sell licenses to use it. We've just done a project we're licensing now to national venues. Merchandise, just be careful of the fact you need to pay for stock up front. And ancillary activities, what else can you tack on? Publications, symposiums, that kind of thing. Corporate sponsorship versus corporate donations. So you can try and get money out of businesses. You just need to be aware of the difference between a sponsorship and a donation. So sponsorship is where they're getting something in return. It's like a sales deal. I'm selling you the option to have your name associated with my event. I am selling you some advertising space. I am selling you the opportunity to bring your product down to my event and sample customers with it. They're getting something back. So the way you get their interest is by thinking, what's in it for them? You know, if you're Bedford River Festival, it's a great option. If you've got 300 children coming to your thing, you just have to say to the business, why would I give what's the link? How is it delivering on my business objectives? If it's not, then the next question is, would they just donate the money in return for nothing? And their reasons for doing that or sometimes around these acronyms, CSR or ESG, which is just where they might have a policy that just says they're going to give back to their local community or for social things or something that links with their business. And they don't want anything in return. They're just doing it because it's a nice thing to do. And then you can just get a donation. You don't have to give them anything in return. Another motivation for doing that is that businesses pay tax on their profits. But if they gift them in the form of charity donations, they don't have to make tax on those. So if they're about to breach a tax threshold, maybe good to give some away to charity. And normally a personal connection is what helps. The best way to approach people is not to write to them and give them a long blurb about your thing. It is to try and develop a personal connection first, and that is the hardest thing to do. I used to raise over £150,000 of corporate sponsorship every year, but I did it by networking with businesses and meeting them at dinners and events, having verbal conversations with them, and then writing to them and going for meetings. I didn't do it by cold calling businesses I didn't know. It's tough. Funding from individuals, same sort of thing. Goodwill, maybe they've got a personal link to the cause. You could do crowdfunding. That might help them to feel like they've enabled your thing. Can you set up membership schemes or friend schemes? And maybe you then go into the sponsorship benefit side of it, where they might also get benefits. Bit of peer pressure. Well, they've sponsored it, so why don't you, or doing things like pay what you can, pay what you want nights and things. Think about ways in which other people might give. If you do get funding from individuals, be so good to those people. Do not forget them. It's so tempting to go, oh, thank you so much. That's fantastic. Right, I'm off to do my project. Say thank you and do it well. keep in touch with them, communicate regularly about what you've done with that money, make them feel special, schmooze them. But if you do, you never know when you might get a random magic gift from them when you're least expecting. So that is your whistle stop tour. And we have 8 minutes before 6 o'clock, despite me being slow to get going. So if you have any questions, I do appreciate that I went really quickly. You can either unmute yourself and just ask them, or pop them in the chat, and I'll do my best to answer. Equally, if you don't have any questions, you can put that in the chat.
I have a quick question.
Go for it.
About fundraising. Now, I really understand that it's about developing that relationship, and I'm kind of on that trajectory with people. It was something I spoke to Matthew briefly about. But obviously, like we're fundraising constantly, really, and we don't always have a locked amount of money. So, how have you gone about sort of fundraising and seeing what you could get, or have you always had to be like, I need exactly this specific amount of money, and then left it open to people to decide how much they wanted to give, that kind of conversation?
I think it depends on who you're asking it from.
Right.
And again, it slightly depends on the funder. So some trusts and foundations, and the Arts Council are one of these sorts of people where they will say, ask us for what you need and you'll either get it or you won't. Whereas some trusts and foundations, and the Gale Family Trust is one of these, where they'll say, well, you can ask for sort of anything, and then it's going to be at our discretion. So you might write it as though you're saying, I really want £5,000 from you. And then they go, oh, I really love it, have 3. And you're like, oh, okay, right. But I can still maybe use 3. It's just now I've got to go and find the other 2. So I'd normally go for, when you're making the ask, make it like you're being absolutely, I need this. But the other thing that you absolutely can do is apply for multiple funders for the same thing. So I will sometimes use the same budget and the same grant application for 2 different funders, and I won't reference each other. And there's always a possibility they might both fund me, in which case, trust me, I will change the project and find some way of using the money. And sometimes they'll ask that. They'll say, are you going to anyone else for funding? And the other thing is you could also turn one down. So that, I mean, it's a bit cheeky, but you kind of have to do it, don't you? You kind of have to just say, well, I can't just ask you and then wait 3 months for an answer. And then you say no, and now I've got to go and ask someone else. Does that answer your question? I'm not sure.
Yes, it does. But I think there's also I've been going the other way where I've literally been fundraising off people, rather than, and it's been like, well, how much do I ask from you? Obviously with funders, I mean, I've got to get into all of that. So that's really helpful to know about that, asking for that amount and seeing what they come back with.
Individuals are really interesting because, again, like you say, everyone is able to do things to a different level. I mean, one thing you could do is even though it's not like a membership scheme, is you could almost treat it a bit like that. You could almost say, well, if 10 of you gave me 50 quid, you know, that'll do, kind of thing. And so then you can explain why you're asking them for 50. You can be like, well, it's because I'm approaching 10 people and I was really hoping you would be one of those 10 and give me the 50. I mean, that person might be capable of giving you 150, but at least you could explain why you're asking for 50. But then actually, sometimes you get people who could easily give you £1,000, and it's like, actually, the only way you know that is by developing a relationship. So I would probably go, think about how, or you might again tier it in your head. I'm going to try and ask 3 people for £500. I'm going to ask this many people for this much money, and I'm going to do a bit of research and try and see who I think might be in each category. And then I'm going to say, I'd really like £500 from you, but I could also use 100. It's just, I'm going to put you in a different category in my head if you give me that. And sort of try and structure it that way and sort of see. And it's so much harder with individuals because it's just, but it also helps if you explain what your ultimate target is. I'm ultimately trying to raise funds. Got this same R. I was going to ask this many people to give me this. Could you be one of those people, or could you give more?
Yeah, that's a nice way to structure it. Yeah, thank you.
Yeah, it's tough. Any other questions?
No, lots of food for thought. Thank you very much.
Thanks, Kay. You're welcome.
Really clear.
It's probably a bit fast, but
in a nutshell.
yeah, and I do really appreciate that I'm sitting here as the chief executive of a charity. I've got charitable status, I've got staff, I've got match built into my organisation. It is a very different world when you're an individual. But the roots are broadly the same. The amounts might be smaller and you start in the same place. So it is really tough. And it's such a tough climate. It's always tough to fundraise, but it is so tough now. The only thing you can know is that everybody's in the same boat. And sometimes funders know it's tough and they come out of the woodwork. I mean, the thing we saw during COVID was a lot of funders deliberately give away more than they normally would. And so speaking Gale Family Trust as an example, they're a local trust funder, broad range of giving. As long as it serves Bedford people, they're pretty happy. And they usually give quite small amounts, like 2,000-3,000 to a project. And actually during COVID, they suddenly decided to start giving much bigger amounts. And we got 9,500 from them, which was unexpected from a funder like that. But it was just because they went, people really need it right now. So it varies, and people might come out and say, actually, we know the climate's tough right now, so we'll give more. Any other questions from anyone else? But if not, it's 17:59, and I think we can finish on time. No, I think we're there. Well, my details are on the slide. So if I have your email address because you're part of the cohort or you booked to attend the webinar, I will send you a PDF of these slides, and I'll also send you an Excel spreadsheet so you've got that spreadsheet in case it's useful. But if you think of anything later and you're looking at it and you're going, hang on, actually now I've got a question, just send a reply and I'll answer it later. So hopefully that's all good. Thank you very much, everyone. I will stop recording now.